What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about Tesla stock. I'm going to run through the entire analysis on what transpired in the last week. Tesla, of course, was up over 5% yesterday with a very nice move to the upside. And on the day right now, it is very flat as the markets are also incredibly flat right now. We're not seeing a lot of momentum because, of course, the markets have rallied so much. And we are seeing a little bit of a pullback even in the Magnificent Seven companies as investors start to rotate a little bit out of this part of the market over to other parts of the market as well, as we have already discussed in our previous videos. So Tesla right now is about as flat as it can be, but on the week, of course, it is up very nicely. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. I would really appreciate your subscription. Definitely do check out the links down below. If you want to join, of course, be a part of our MoneyVest community, you get access to all the members only videos, 40 plus tutorials and lectures and educational videos, along with Excel spreadsheets, including my fair values, my buy and sell alerts, options alerts, trade ideas, Discord channels. Everything's going to be down below with that 16% annual discount that's available for the rest of the month. And of course, the courses, fundamentals, technicals, options, and psychology course, also linked down below. And do connect with me on Instagram as well. I do share a lot of portfolio updates, profit and loss, polls, different strategies, tips, videos, reels. Everything's going to be over there as well. So link's going to be down below. My handle is going to be CASWRP. So Tesla stock is surging again thanks to Jerome Powell. And of course, thank you, Jerome Powell and the Federal Reserve, for once again coming up with the summary of economic projections. We talked about that in our yesterday's video with the FOMC meeting. And of course, they are citing for 3 rate cuts going into 2024. This is what's really causing a lot of optimism and a lot of bullishness in the market, especially when you consider tech stocks and more specifically high growth companies, and more specifically solar and companies like Tesla, which are going to benefit from lower interest rates as it becomes a little bit more feasible for people, for consumers to finance new vehicles. So there was a recall news, 2 million vehicles recalled in the US over autopilot defect. So Tesla is recalling nearly all vehicles, over 2 million cars on US roads over defects in its driver assistance systems called autopilot. And this decision follows a 2-year investigation into crashes that occurred when the technology was in use. And of course, it is going to be done automatically over the air to fix the issue. Even though the update will happen automatically without visiting a dealership, US regulators deemed the process, of course, a recall as well. But despite that, and of course, the tax credit disappointment, it doesn't hurt Tesla stock right now because on the week, it is still very much green. It is up a little bit over 3% on the week, starting to move back higher over $250, $251 per share. We'll come back to the technical analysis here in just a minute. But if you take a look, Barron's had written reportedly that recalls don't matter all that much for car stocks. Tesla recalled 2 million vehicles to update warning systems on autonomous driving features, and the tax credit changes are more problematic because investors were aware that many EVs stood to lose that $7,500 tax credit in 2024, which is actually very important for, of course, US consumers, because the US is subsidizing this transition away from OEMs over to electric vehicles, of course, in order to save the planet and fight climate change. And the US government doesn't want to subsidize EVs with Chinese batteries anymore, and China remains the largest EV battery maker on the planet, supplying Tesla and many other automakers, still losing all that $7,500 credit, as Tesla now expects on 2 versions of the Model 3 was a surprise as well. And that still affects only a small portion of Tesla's lineup. However, the biggest issue from the credit changes might be the relative pricing impact. The performance Model 3 is now less than a long-range Model 3, adjusted for the credit as well. So we'll find out exactly eventually, of course, how this affects the overall revenue, the deliveries, and the earnings. But this, of course, is going to be a little bit impactful because Tesla credit, the EV credit, is very important, especially for US consumers when they are looking to finance an electric vehicle, especially Tesla. Now, there was one more catalyst, which is not great. In a blow to Tesla, India says not planning to cut EV import tax at the moment. So government statement is an unexpected turn, considering it was working on a policy that would have allowed international companies to import electric cars on concessional tax rates if they commit to eventually manufacturing in India. So we know that, of course, India and Tesla have been going back and forth with each other, because the import duty tax over on electric vehicles for Tesla is over 100%. So if you plan on buying a Tesla model here in India, if you're importing it, you're going to be paying twice the amount for the car in import duty tax included. And presently, there is no proposal either to provide an exemption from local value to additional cost or to provide subsidy on the import duty on electric vehicles in India. This was the junior minister from Ministry of Commerce and Industry told Parliament late Wednesday. And Mr. Prakash also said that existing policies under the government's Make in India push are aimed to encouraging domestic and foreign investment in EV industry. The government launched a $3.1 billion incentive program in 2021 to boost local EV production. In addition, it's offering incentives to companies that want to build batteries in India under a $2 billion program as well. And there was also some labor disputes over in Sweden over the past week, for which there is going to be some type of protest beginning on December 24th, so on Christmas Eve, unless Tesla signs a collective bargaining agreement with the Swedish union IF Metall. The transport worker union said, of course, in a legal setback for Tesla, a Swedish court appeal said it had overturned a ruling that allowed the company to collect license plates directly from the manufacturer. So there are some tensions between the labor unions over in Sweden and of course Tesla as well. So Swedish labor union to stop collecting Tesla waste as well. So there's of course definitely been, a lot of back and forth. I mean, of course, from a macro standpoint, there's been a big catalyst in favor of Tesla and a lot of other electric vehicles as rates continue to potentially come down and get cut. And as a result, we have seen Tesla on a very nice move to the upside. It's up 28%. This right here is going to be the entire technical analysis on the company, as we have already talked about, Tesla being trading in a little bit of a downtrending channel of lower highs and lower lows, but it's now starting to break out of that lower high and lower low. Is starting to break outside of this consolidation pattern. Of course, yesterday we had a very strong move to the upside, up almost 5%. Today, basically flat, and the next target and resistance is going to be 269, close to $270. So this right here is going to be that next level to watch for Tesla moving forward, with the support level sitting roughly around $240 per share. Now, in terms of all these catalysts, recall is not a bit of an issue. Electric vehicle tax credits of $7,500 for specific Model 3s, that may impact a little bit of that revenue moving forward, but it's a very small portion of the overall lineup. So again, not a significant material impact on the company's revenue. When it comes to the Swedish labor laws and of course the labor union protesting, also I don't see that as a big catalyst driving the price down any more than any other catalyst. The only sort of concern, of course, is the India problem, which again, there needs to be some compromise between Tesla and India in order for this to work out. Earlier, we obviously did have reports that India is going to be reducing the import duty tax to make it more feasible for consumers in India to buy Tesla vehicles. And of course, what does India want is a manufacturing unit, production, development here within the country so that it creates jobs and of course improves the GDP of India as well, which Tesla is not really, it's not that they don't want to do it. It's just that they want to validate the market first before they actually start building big gigafactories or manufacturing plants or battery production here in India as well. So I kind of get both arguments. I kind of get both perspectives, that India obviously wants to do everything that's in the self-interest of their economy and their people. And Tesla, on the other hand, wants to obviously tap into this market, but they can only do that if it benefits both themselves and of course if it benefits India as well. So of course eventually we'll find out how this all plays out, but I do strongly believe that India has a massive potential in this transition away from OEMs over to electric vehicles as well. So it's a massive market for any EV that's potentially going to enter in this space. Right now there's not a lot of competition in my opinion when it comes to electric vehicles. It's a big market for NIO, for BYD, for Tesla, for GM, for a lot of companies that may eventually end up importing or exporting over to Indian market as well. But of course, the price point needs to come down. Nobody's going to be paying $50,000, $60,000 for electric vehicles. I think the pricing point needs to be a little bit lower, closer to about $20,000, $25,000, far more reasonable for electric vehicle here in India. So when it comes to technicals, next target's going to be $269, $270. So this right here is going to be that level to watch. The moment we get up to $270 is when I will personally start looking at selling calls on Tesla, because the premiums are always really attractive on Tesla. So if you come over to Tesla premiums, if I open up Webull and we run through the options chain, you'll notice that Tesla options are actually very lucrative. Right now, I believe this is going to be Tesla's options, but let's just quickly search that again. So if you go over to calls, and if I go over to 30 days out, so let's say January 12th, and I'm looking at calls expiring in, let's say 275, we're looking at 475 in premiums, 300 is going to be 168, so that's actually really, really low, but it's also way out of the money. And the delta is going to be closer to 0.11, so really low probability of this option expiring in the money. And of course, if we go down a little bit and let's just go to 290 or 285, we're looking at least 250 to as much as 310 for premiums. That of course is per contract, so that's over $250 to $300 per 100 shares that we can generate with somewhat reasonable delta of less than 0.2. So probability of expiring in the money, of course, is really low. And we already know that there's a big supply and a big wall of resistance for Tesla, sitting somewhere between $275 and $310 per share for the company. So that's where we are, still trading within the context of this downtrend, but starting to see a little bit of that breakout back higher. Next target resistance is going to be $270 for Tesla. And this right here was your entire update on what happened this past week. Hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Definitely do check out the links down below. Connect with me on Instagram, courses, everything's going to be available with the link down below. And as always, happy investing, and I will see you all in the next video.